Tariffs were supposed to be a weapon, a show of strength, a way to protect American industries and put foreign competitors in check. But instead of bringing jobs back or securing economic dominance, they have ignited a financial disaster so massive that in just one day, the US stock market lost $4 trillion in value. This wasn't a random market dip. It was a direct response to a tariff war that has spiraled out of control, leaving businesses scrambling, investors panicking, and America, rather than China or Canada, taking the heaviest blows. What began as a strategy to make America economically unshakable has now turned into a self-inflicted wound, one that is draining wealth faster than any foreign adversary ever could. But what caused it? Let's find out. Let's start with what Trump planned for nations. Firstly, China. Trump's decision to raise tariffs on Chinese goods from 10% to 20% was meant to squeeze Beijing into submission. The logic was simple. Make it more expensive for Americans to buy Chinese products, force companies to shift production back to the US, and create an economic advantage that would leave China struggling. But instead of China buckling under the pressure, it struck back with ruthless precision. Beijing retaliated by slapping heavy tariffs on American agricultural goods, cutting deep into the backbone of the US economy. The message was clear. China wasn't going to sit quietly while Washington tried to strong-arm it. The impact was immediate. American farmers, who rely heavily on exporting wheat, corn, and chicken, suddenly found their biggest buyer walking away. Demand plummeted, shipments stalled, and the very people Trump had promised to protect were now watching their revenues collapse. While farmers were left reeling, Wall Street was entering full-blown panic mode. The tech sector, which had been the main driver of the stock market's growth for years, suddenly found itself in freefall. Apple, Nvidia, and Tesla companies that depend on global supply chains, Chinese consumers, and stable trade relationships were among the first to take massive hits. The Nasdaq plunged 4% from its previous high, dragging down investors who had once celebrated Trump's pro-business stance. Tesla alone lost $125 billion in value, a stunning blow that showed just how fragile the market had become under the weight of escalating trade tensions. But it wasn't just the immediate damage that sent investors running. The memory of the 2018 to 2019 US-China trade war was still fresh, and the signs were eerily familiar. Back then, tariffs had disrupted supply chains, forced companies to raise prices, and slowed global economic growth. Now, the cycle was repeating itself, only this time with even higher stakes. Businesses, unsure of what move Trump might make next, began slashing investments, putting expansion plans on hold, and hoarding cash instead of hiring workers. The ripple effect was unmistakable. Confidence in the US economy was collapsing, and the consequences were just beginning. Here's a reminder to please like and share the video and subscribe to our channel to watch more videos on Africa's geopolitics, economy, and changing landscape. Let's continue now. It was not just China behind all this. After China comes Canada. If trade tensions with China were predictable, the tariffs on Canada were downright baffling. Canada has long been one of America's closest economic allies, a stable and reliable trade partner. Yet Trump decided to go after it with the same reckless aggression. The administration slapped a 25% tariff on Canadian imports and added a 10% tariff on energy exports, expecting that Canada would have no choice but to accept the new terms. But instead of rolling over, Canada retaliated with its powerful counterstroke, adding a 25% surcharge on electricity exports to the US. This single move sent shockwaves through the American energy sector. The cost of electricity for US manufacturers and businesses immediately surged, making it more expensive to produce goods domestically. Instead of forcing Canadian suppliers to lower prices, the tariffs ended up driving costs higher for American industries, putting them at an even greater disadvantage. The impact on corporate confidence was devastating. Delta Airlines, one of the largest carriers in the US, announced that its profit forecasts had been slashed in half, citing economic uncertainty caused by the tariffs. The announcement triggered an immediate sell-off, sending Delta's stock plunging 14%. It was a clear sign that businesses weren't just worried about short-term losses. They were fundamentally rethinking their investments in an unpredictable economic climate. The stock market as a whole began to spiral. The S&P 500, which had reached record highs just weeks earlier, suddenly found itself in a full-scale collapse. Hedge funds, which had bet heavily on Trump's economic policies, dumped their stocks at the highest rate in 2 years. Confidence in the administration's ability to handle economic affairs was unraveling, and the numbers spoke for themselves. All gains made since Trump's re-election had now been completely erased. So, with this, the U.S. stock market suffered a massive $4 trillion loss as escalating tariffs triggered a widespread sell-off. It was one of its worst financial meltdowns in history, erasing trillions in investor wealth. Losing $4 trillion in market value isn't just a bad day on Wall Street. It's the kind of catastrophic wipeout that reshapes the global economy. The sell-off wasn't limited to tech stocks or agriculture. It spread like wildfire across the financial sector, hitting everything from banking to retail to cryptocurrency. Bitcoin, often seen as a haven during times of market panic, fell 5% as even the riskiest investors rushed to pull their money out of volatile assets. While stocks crumbled, investors ran for safety, sending bond prices soaring. The yield on 10-year U.S. Treasury bonds, a key indicator of economic confidence, fell to 4.22%, signaling that money was rapidly flowing out of the stock market and into safer government securities. When investors start prioritizing safety over growth, it's a sign that they are bracing for a recession, and that's exactly what is happening now. Despite the carnage, the Trump administration has shown little concern, with some insiders even suggesting they are comfortable with a market downturn if it helps them achieve broader trade goals. But this level of financial destruction isn't just about reshaping trade relationships. It's about shaking the very foundation of America's economic future. If businesses lose confidence, investors flee, and corporations start scaling back, the damage won't be temporary. It will be long-term, deep, and potentially irreversible. But if you think all of this economic destruction is simply the result of China and Canada retaliating, think again. This isn't just a trade war. It's economic self-harm on a scale never seen before, engineered entirely by Trump himself. Other nations aren't waging an economic attack on the U.S. They are merely responding to a reckless policy that has thrown America into a downward spiral of its own making. While Trump's tariffs were supposed to bring economic dominance, they have instead triggered a catastrophic chain reaction of uncertainty, inflation, and capital flight. And the scariest part? This is just the beginning. Trump's entire strategy rested on the belief that China and Canada would fold first, that they would wilt under economic pressure and come running back to negotiate better trade terms for the U.S. But what he failed to understand is that these nations are built for endurance, while America, driven by short-term financial markets and political cycles, is the one suffering the immediate consequences. China has not only absorbed the blow, but has turned it into an opportunity, fast-tracking its transition to a self-sufficient technology powerhouse. And yet, despite all this chaos, there is no clear exit strategy. Trump didn't implement these tariffs with a carefully structured long-term plan. There was no contingency for how the U.S. would navigate economic retaliation, no consideration for how global markets would react, and no diplomatic groundwork laid to prevent escalation. This was pure political posturing disguised as economic policy, and now the consequences are unavoidable. Markets don't run on empty bravado. They run on stability, confidence, and long-term security. The $4 trillion that just evaporated from the U.S. stock market is not some fluke. It is the market's brutal verdict on Trump's failed experiment. And this isn't just about numbers on a screen. A market crash of this magnitude directly affects jobs, wages, retirement savings, and the ability of businesses to expand. When investors flee, businesses shrink. And when businesses shrink, people lose jobs, purchasing power declines, and recession creeps in. Even worse, there is no end in sight. Trump seems completely indifferent to the financial carnage unfolding, with some in his administration suggesting that they are comfortable with a market downturn if it means pursuing their trade agenda. But this is not a temporary dip in the market. It is a structural collapse of economic trust. The longer these tariffs remain in place, the more American businesses will suffer. the more consumers will feel the squeeze, and the more damage will be done to the US economy. This is no longer about punishing China or Canada. This is about America deliberately sabotaging itself. Washington has turned its economy into a battleground and its people into collateral damage. The only question left is, how much more destruction will America inflict on itself before someone finally stops the bleeding? Because at this rate, America's biggest enemy isn't some external adversary, a foreign nation plotting its downfall, or a rival superpower challenging its dominance. It's the reckless, short-sighted policies tearing apart its economy, destabilizing markets, driving investors away, and causing self-inflicted wounds that may take decades to heal. It is possible that the American people, witnessing the devastation unfolding before them, the collapsing stock market, skyrocketing prices, vanishing jobs, and an economy spiraling into uncertainty, will reach a breaking point. The mounting pressure, financial losses, and political backlash may ultimately force Trump to step back before irreversible damage is done. Do you think that if Trump remains silent, Americans will speak? Will they force him to do something? Let us know in the comments section. Will Trump step back after the US economy is completely ruined? Do you want to watch more videos like this one? If yes, subscribe to our channel and press the bell icon next to it. We have decided to bring videos on something nobody talks about: African politics, economy, and increasing power. Thanks for watching, and until the next video, stay tuned.
Tell us what you think in the comment section. Like and share the video, and subscribe so that you don't miss any of our African videos. It's the best way to support us.